Folks, today I'm going to talk about defensive ETFs for the election cycle. Now, with the election quickly approaching, many traders and investors are searching. They're searching for the safest and savviest investment opportunities during the current market environment. Generally speaking, markets, well, they tend to move sideways as we head into the elections due to the unforeseeability that different policy changes bring to the economy. In our case, we've got two presidents that have a polar opposite view of the world, and some sectors and industries that were thriving may see an end to their trend. Similarly, trends that have been profitable over the past 4 years may no longer continue to work or trend. No matter how you look at it, the market is entering a high level of unforeseeability, and we've got to look outside of the traditional box for opportunities that will continue to persist regardless of where the market is shaping up to go or wins the election in the coming weeks. And that's why I want to bring your attention to two ETFs that have the capability to trend for the next several quarters, regardless of who wins the election. So let's get into it right now. The first ETF on my horizon is Advisor Share Vice ETF. I like the name Vice ETF. The investment thesis of the Advisor Shares Vice ETF believes that investing in select alcohol and tobacco companies will provide continued growth and long-term performance across all types of market environments. And that's the key. Coupled with the continued societal acceptance and regulatory approvals of cannabis across jurisdictions, a new investment avenue has emerged that provides compelling upside to complement the steady and more predictable returns of the coined recession-proof equities. Outside of Canada, which is the first G7 country to nationally legalize cannabis, the size of the legalized marijuana industry remains very small. Yet, that market is expected to reach $40 billion by 2023. In terms of ETF composition, cannabis-related firms list with 40.9% of its weighting. Next is alcohol with 27%. Next, you've got restaurants and entertainment with 12%, tobacco and cannabis 11%. Close to 80% of the companies come from North America, followed by Europe with 13.3%. Relative strength is positive, with the stock, or the ETF in this case, pulling back recently after making new high swings. I'm anticipating some volatility, but if the market begins losing steam, there's a good chance the stock will continue trading higher in the near term. Next, I've got the Van Eck. It's called the Van Eck Vector Gaming ETF, ticker symbol BJK. The Van Eck Vector Gaming ETF seeks to replicate closely as possible before fees and expenses the price and yield performance of the MVIS Global Gaming Index, which is intended to track the overall performance of companies involved in casino hotels, sports betting, lottery service, gaming services, gaming technology, and gaming equipment. At present in the US, DraftKings, FanDuel, which is part of the Euro-based Flutter Entertainment, are two of the main online platforms for sports and sports fantasy betting, and they're hot. DKNG stock, which went public in late April, is up over 400%. Flutter Entertainment, which is one of the largest gambling companies in the world, in terms of revenue, is up about 23%. Not bad. Expect price action to continue expanding regardless of which way the political view goes, since the country will need all the extra cash it can generate. And even before the last election, we've begun to see an uptick in states becoming increasingly friendlier to sports betting on a Fed level. And that popularity will only grow according to hard data and statistics. Expect the gaming sector to continue to generate returns beyond the S&P 500 in the near term. And I hope this helps with two ETFs that should buck the trend regardless of which way the election goes over the next few months. Hope that helps. Folks, thanks to his experience working inside one of the best hedge funds in the world, where he helped generate over $700 million, Joy of the Trades, Jeff Zananeri, has unearthed a simple way for everyday traders to profit monthly. His 3-day profit plan consists of an unusual group of trades that start on a certain day every month and allows traders the opportunity to cash out 3 weeks later with a huge payday. Thanks to his strategy, Jeff's been able to spot gains like $6,050, $6,550, and even $8,400. If you're ready to get in on Jeff's next trade, just click on the link at the bottom of this page. Do it now!